Yeah, it looks like it's, yeah, I did it. I did it. Pat me on the back here. And what's up, guys? I know you can't see my face over there on TikTok, but here I am. I am live here, up here in Westlake Village, California. Another beautiful day out there, and I'm going to jump right into it as the dollar, we've been saying, is the harbinger of peace and prosperity or death and despair. And the dollar, as the dollar comes down, risk assets typically go up. So let's jump into Bitcoin's price action. I know that's why you guys all came here tonight. And so we talked yesterday about kind of macro big picture analysis. And the number that is coming to mind is $24,000 Bitcoin. And that is going to be this level right here. If we can clear this green box of peace and prosperity, hey, we very likely take a run at 24,000. And we have some other signals that are firing off that will let us know that, and by the way, guys, I think, you know, it looks like a pullback is more likely than not. We closed the day today with a bearish engulfing, almost bearish engulfing candle. Not quite, but we have the daily Stokes crossing down from a very high level. And on the RSI here, we're bouncing off the exponentials. So I do think there is a chance for an additional run, at least one more stab higher before we do take an official pullback. And as long as Bitcoin is closing above this level here at 20,500, I would suspect that we have one more run higher. Although that is a bearish candle. And as really ultimately, as long as Bitcoin's above 18,500, I do consider this more likely to head up towards 24,000 over the short term. Short term, I'm talking over the next 30 days, somewhere in that range. But let's kind of get into some of my traditional things that I look at. And again, welcome back to Bitcoin Advisors channel. I want to go ahead and remind people to subscribe to our YouTube channel. It is right there in the description in our profile. And what we're going to do is cover some price targets on Bitcoin, the stocks, dollar, gold, and silver. And the first thing I do when I come in to trade, check out some of the economic data. And what came out today is PPI. PPI came in at, and that is the producer price inflation. We had CPI, which came out last week. And PPI came in at, where is it? Bear with me just a second. So today, PPI year over year came in at, negative 0.5%. That's the one I was looking at. PPI month over month. So somehow inflation went down last month, and that's more in line with what Powell wants. And so the dollar came down today, and then retail sales down. Retail sales was up 6%. So higher than the consensus and right in line with the previous. So that was the one kind of bullish thing for the dollar, and everything else bearish for the dollar. So not much economic data out there today. What else? What else did I want to bring up? I guess the main event today was, again, the 10-year cap on the Japanese bond got raised from 25 basis points to 50. And so the end of cheap money is here. The end of cheap money, and well, essentially that happened last month, but they made the announcement today that it was unchanged, so they're keeping it at the 50 basis points. So how does that? Here's what bottom line, what I'm looking at right here on the 4-hour time frame. Volatility is beginning to increase as momentum is down. We're getting kicked out of the bullish control zone here. And do we have any divergence? So if we can confirm this as a local low, we'll have a couple drives of hidden bullish divergence. That's 1, 2, 3, and I would expect one more stab at the top side of this range. How would we confirm this as a local low on the 4-hour time frame? Any kind of a closure back above. More aggressive traders will, 4-hour above 21,000. Very, very likely we get a shot back to the top side of the range. Coming in at 21.5. And that might give us our last drive of bearish divergence. Again, this kind of a read right here, if we reject the bearish control zone, by the way, we do have a link for TradingView in our profile that you can set up TradingView for free. So that's the 4 hour for you. Let's check in on the 1 hour as we close the day here. And we are getting the silver cross to the downside. And I do think we are likely to bounce here, more likely than not, putting in the 3 drives of hidden bullish divergence coming back from this pivot way back here. So what is hidden bullish divergence? That is when the price is making higher lows. We got 1, 2, 3. Some might call this 3 little lows right here, but I'd confirm this with any kind of a closure back above, again, 21,000. I'd probably use this level right here at 21,057. Above that green 55, I'd be looking for a run back at 21.5. Now, something to point out on our higher term time frames is the 12 hour. And really, this is the one I'd really like to see to get the next major move higher. And I'd want to see a 12 hour closure above 21.7. And very, very likely that will give us a run back to, well, at least the top side at 22,300, the top side of that green box here. Ultimately, I do think if we close anywhere above 21.6, we're probably going to make a run at 24,000. And that has kind of been my hypothesis since we've gotten back up into this region. We're coming into that purple 200. Volatility is beginning to decline here, so technically you'd be looking for that mean reversion bounce, which means technically speaking we should be looking for downside first, but because the market has been ripping pretty hard to the upside and the daily is up here, let's see, what does the 2 days say? 2 day Stokes are still up, and we're just getting in the bullish control zone. Volatility is still high. What about the 5 day? Now this is one, if you've been following our YouTube channel for some time, the 5 day volatility stochastic signature. What is that? When volatility gets to extreme lows, by the way, this is called the BWP, the Bollinger Band Width Percentile. When volatility gets low in cryptocurrency land, one thing we know is that it's going to expand at some point. Well, we've got the official expansion, and with that said, volatility paired with stochastic momentum, and this will remain to the upside as long as Bitcoin's above 16,924. Then we would expect the price to go in the direction of the trend and continue expanding to the upside. Now, the average gain on this signature is going to be 49% from the low to the next high. And again, 24,000. Why does that number keep coming up? Well, that's right at the last kind of weekly high, coming in at 24.5. And I'll just measure from the low to the high. The next high is going to be, 49%. Yep, that's right where she should go. Now, if we can get above 49%, and here's why, I still think this is a bit of a bear market rally. I don't think all the pain in the stock market is over. Again, Bitcoin is a higher beta tech stock, and NASDAQ hanging out still in the falling channel here, or call it a falling wedge or whatever we want to call it. Still just hanging out here, and I do think we're going to head higher on stocks. I do think that is the case, especially if the dollar continues to slide. And what do we have on the dollar here? So on the 5 day time frame, volatility is maxed out and will cross up in 1 day and 23 hours here from a very low level. So I do think the dollar is coming in for a bit of a bounce, but as long as we are below that 105 pivot, I would expect the rest of this 5 day volatility signature move to play out. And what does that look like? That would again look like a run up to 24.5, somewhere in that region, which I, do not, and again, not financial advice. I'm not a financial advisor. That would be a 20% gainer from where we're at today. Personally, what do I want to see happen? Here's what I would like to see. I would love to see this happen. I'd love to see Bitcoin, we just broke out. Come put in a retest somewhere around the yellow 21 or between the green 55 right there, and then take a shot up here. Because you don't want to buy the higher high, you want to buy the higher low and take your long there. And an easy way to put risk management in, right, is, you take a long from, call it 18.3, and then you put your risk management right below the silver cross, and you target a move up to about 24.5. And if that breaks, if we can break 24.5, the next stop is going to be this weekly 31,627. And where does that line up with? Oddly enough, right with the green 55. And this will be sloping down over time, right? Week over week. And the average days, again, the 5-day volatility stochastic momentum play here is the average days to take on this. Credit to Mr. Crown. He's the one who points this out every day, all day. We're talking about roughly 70 days, something like that. Somewhere between 60 and 70 days. And this market has been moving faster and faster. So this move could happen in 2 days. I mean, look at how this big green girthy candle just hit people in the face, especially if you were going short. I think $700 million worth of shorts got liquidated. But I did want to play you guys a quick clip from the BOJ. And shout out to Real Vision. They put out some great content here. I really, really enjoy the Real Vision channel because they cover all kinds of different data and economics. And this guy, he really gets into, well, if I can get the internet to work here. Apparently it doesn't want to, oh, here we go. So let's take off some of this music here.
Against all that, basically, the Fed found that
I'm going to play it one more time for you guys.
The narrative at the time was Japan is finally experiencing, realizing, and therefore reacting to inflation. Japan's been stuck in the deflationary spiral for 3 decades or whatever it was. Finally, you're getting 3%, 3.5%, and probably tomorrow we might see a 4 handle on CPI in Japan. And so therefore they cannot continue to be this weird outlier major central bank that is not only not hiking, but is actively easing policy and suppressing the long end of the yield curve and doing unlimited buying of the sovereign rate market. That needs to stop. They need to get in line, and it's about time. And so against all that, basically the Fed found that then they lifted they got into a fight with markets throughout mostly in June, and widows were made because they were policy unchanged. Then in December, they lifted, but they lifted not because of inflation. They lifted because of deteriorating financial market conditions or functionality or dysfunction, if you will. You had like very, very strange things happening in the JGB yield curve, for example. And so Brian, if you actually put up this first chart of the Japan yield curve from before the December meeting and before this current meeting. So if you take a look at this, you'll basically see that in December, that yellow line, that yield curve, in both of them actually, you see this very weird kink. This kind of where in the 10-year tenor, and that's because and that's what a situation where you have 8-year and 9-year JGB yields not only yielding higher than the 10-year, but they're yielding higher than the 25 basis point at the time yield curve control cap. And so there were issues with that. There were issues with like liquidity or illiquidity. There were many days where zero trades were made. You have distortions in futures markets.
All right, so I'm not going to bore you guys to death with this, but I'm just going to point out something because the dollar rules the market, right? The dollar, King Dollar last year ripped 20% of the upside, right? This is the dollar. Started to cool off in December, really cooled off in December. And I guess the peak was in October. Oddly enough, gold bottomed right as the dollar peaked. I mean, same thing with silver. Silver and gold both bottomed right as the dollar peaked. But I don't think the bull run is over for the dollar. However, I do think there's more room to go to the downside. I do not think that the bull run for the dollar, ultimately, I mean, my target on the dollar, if I zoom this out a little bit more on a monthly time frame, more in line with the dollar ripping to the upside over the next, I don't know if it's going to be 6 months, 12 months, or 24 months. The 6 month and the monthly time frame indicate that the dollar could break out massively over the next couple of years. I could be totally wrong. And where does this get invalidated in my book? Because see, on the monthly time frame for the dollar, we've got a macro breakout. We've got a higher high, and now we're going to have a higher low put in somewhere between 101 and I'd probably say 98 bucks. And then we're going to judge it from there. And the question is, does the dollar remain king? And here's what I'll point out. If you are looking at the 10-year yield on the Japanese Treasury bond at 0.4%. So let's say if the government in Japan and all your yens are getting 0.4% for the next 10 years. I don't think you're going to like that. I mean, personally, I would be buying more dollars, and I'd be, how do you do that? In the form of U.S. Treasury bonds. And take a look at the 10-year on the dollar. And again, pulling back, putting in a bit of a top as yields come down on the 10-year and the 2-year and the 30-year for the United States. I do imagine that provides probably a relief rally for this quarter in risk assets. So that's it for today. I think I'm going to wrap it up with an invalidation on Bitcoin. So our target on Bitcoin short term, 24,000. We think a pullback is likely to happen first before anything. And really, if we get a 12-hour above 21.5, then nope, pullback is not happening. But pullbacks on the dollar, on Bitcoin can come as low in my book. Let's use the 618, or let's use our fib tool here. From the low to the high here, as long as we're above the 618, yeah, 18.5, then I would suspect that $24,000 target does get hit. As soon as we begin really to close below, call it 19,000 bucks, there's your first warning sign. And then, let go, rip into the downside, probably going to make new lows anywhere below 18.3 in my book. That's it for today, guys. I hope this worked out. First time going live on TikTok and YouTube at the same time, or maybe the second time doing it. But I hope you guys have a blessed, highly favored day. Anybody got any questions out there? You want to drop a question in? I'm saying 24K, yeah. And where does that get? As long as Bitcoin is, above 18.5, yes, 24K I think is very, very likely based off of statistics and probabilities. Again, that is the 5-day time frame stochastic volatility read and the average move on this read. And what is that? Again, volatility expansion from the lows, momentum to cross to the upside, and you would expect the price to go, in the direction of the stochastic. If the average move is 49% from the low to the next high, we're talking about this would be right in line at 49%, coming in at 24,457. Any other questions out there? Any other coins you want me to cover? Anybody else got a little question out there? All right, that's it for tonight, guys. I hope you enjoyed, and don't forget if you enjoyed the content, just drop us a like and a sub on YouTube. Take care.